So, Shavi FS Hub, we want to make a summary of the day and we possibly let you know that tomorrow will be a confirmed buy for gold. Gold buyers are going to buy tomorrow after the correction. It makes a whole lot of sense to see that today daily candle took away the bearish engulfing. It has engulfed a 3 day candle. 3 day candle. It's engulfed. It took body of Sunday, body of Friday, body and week, and body of Thursday, and that's enough. That's enough. But don't be quick to see it and begin to judge sales. It's not going to happen. It's not going that way. It will not go that way. So let's dive in, quick dive into the structure, so that we can work with empirical facts. Because everything in trading is based on empirical facts. So if the facts are not clear, then we may want to discard it. So let's look at the structure once again. I have a breaker structure at this level, and I will focus on the body of the daily candle. Why am I focusing on the body of the daily candle? Because I'm interested in the price action of weeks and body. So I want to see break and close on daily and rejection on daily. This will actually guide our buyers when we get these things this way to enable us to know when exactly there is a break of structure in daily, even if by a small penetration, either on the supply or on the demand, I will take it personal. If I have a daily roof pierced by the next day candle, of course I know that the next day candle will come for a test. Most times, in fact, 80% of the time, it comes for a test and we continue to buy because the previous day candle broke the supply roof, and a broken supply roof becomes a demand floor. That shows the presence of liquidity and optic continuation. So here you see why we have sold at 2,690. It's not a coincidence. It's not a manipulation, as most traders will say. It's not manipulation. It is based on the structure of the market. And when you look at it very well on daily, let me explain it. Now you see price has formed a support structure. Price formed a support structure. You see there is a support structure, and it's a lot of times respected in that structure and ascended now. And there's a break of structure, and there's when price broke the supply, it became a demand floor. That demand floor gave birth to the current all-time high. So that means we have two demand floor. The two demand floor makes up of the ascendant and ATM. So this is our strategy, and renamed everything you know about trading. We have changed the name of all of them. So we're just doing our own thing, but we have our results. So these are ATM, ascending trend line. So these are my code. I code all these things ATM. So the break and retest structure have given us an ascending trend line. And why not say, okay, move it here? We have to wait. The price create a perfect structure. And when that current all-time high, which I will also note that there is a likelihood of price retesting this zone in the future, and that retest in that zone might likely come with a break of structure. So let's keep that date that 2790 could be broken at any time. So let's keep that in mind. Then the next thing that happened is that price came and stopped at that ascending trend line. A previous supply roof broken returns as a demand floor one, returns as a demand floor two. Now, because we are already on a bearish impulse leg, the impulse leg here is a sell impulse, indicating rejection by whales. Institutions refuse that they will not buy gold above 2,790. That's the limit. They cannot pay more than that. At the moment, they cannot. They will not pay. They feel they have spent so much money, they won't put money again. So that bearish leg was what continued to drop the price until we came to this level. And we didn't just come here again by coincidence. We came here because we had a descending trend line. There is a descending trend line here on daily. That descending trend line on daily, you can see the roof, you can see the floor. This is the floor of that descending trend line, ladies and gentlemen. Can you see it? This is the floor. And in the future, this will continue to remain a vital buying zone for gold. I'm not telling you to like it, I'm telling you what we have seen over the time happen 100%. So this becomes your new buying floor. Now we have made a structure. If you look at the roof and look at the floor, you have a structure here. So most likely what price will be, price might move up to update this roof again. So it will now be a movement in a range where price update the floor, update the roof, and might likely come down again. Or it can do otherwise. But we are just saying what the structure is all about. Then when that structure came back, it broke the demand floor. It didn't break the demand floor because it wanted to, but because we already had a structure. And if you clone that structure and take it here, the same structure, in fact, is laying the foundation for all the uptick you are going to have, and the resistance is just providing the opportunity for that. And I'm also telling you that even if we reach to the top, this will be your new target. This will be your new target. As long as this price action is complete and this price action is correct, this will lay the foundation for possible break of the previous high. So what it means is that if SAU is coming to break the previous high, then what it will do, it will most likely come to this roof for a potential rejection. And if that happens, that will be around 2,800 and something, exceeding 2,800 mark. So what this means is that if you have here a seller that he takes your money in a way that you will think, who did you offend? You will really be bitter. You will think, who did this to me? Nobody did it to you. It's the structure of the market. The market is not designed to make money. The market is designed to drain you. That is what the market is designed to do. So you must develop an orthodox strategy to understand the concept. So now let us look at it from a horizontal perspective, where we have a strong structure. You see, we have a very strong structure at this level, more than strong at this level. I can tell you, if you're on this trade for buy, like I said, two, sniper entry at 2655, 2656. You are not going to, you are not bad by doing so. The reason is because the price action is clear. Price set up here, demand floor, breaking for demand floor, price came back, broke a supply roof, came down, broke a demand floor, started respecting the structure. So for a very long time, price did a whole lot of consolidation, on this floor before break of supply and price came back, broke the structure again, and respected it before breaking the structure. So now it returns again, it's going to respect the structure, technically setting up a bullish. So we have the daily candle closed by roughly maybe about 3 4 hours or so. And I believe that you begin to see a significant daily rejection. You will see a significant daily rejection from that price action. I'm just telling you what the structure is saying. This is daily structure. This is pure daily structure. So it's very, very orthodox. When you hear those grammars, those change in character, those break of structure thing, those area of mitigation, area of imbalance, all those blah blah blah. You're not going to hear all those things. We are not fond of all those things. We are not fond of it. We want to make trading as simple as possible by explaining empirical facts. So what we do is to look at the chart and tell you what the chart is doing. And if the chart changes, we recalibrate. So it's not a do or die affair. So in this case, we are not saying that everything we say here is wrong. We are explaining the structure of the market. And when you look at it, look at the green line. You have here break of structure and price continues on weakest, break of the supply and price continues on demand. So technically telling you that this is where we have a concentrated buying order. And that buying order here have a potential to break this supply roof. And when you look at the length of travel of this order, you will see that if we have a bullish candle coming in tomorrow, it has a tendency to break that structure. The tendency is very high. So you look at it, look at the candle that gave us the impetus to remain here. Look at what it has done. It did significantly well. bit significantly. And we are measuring the distance to let you know that at that level we could begin to experience some kind of form of bullish reaction, which we have the capacity to break this line because we want somebody who will break the structure. So if he manages to break the structure, exactly at it, because look at when price returned to this level, it gave us a strong bullish candle. That strong bullish candle picked up price from 2,659 and closed at 2,700, an incredible 600 move. Now, will price do the same? There is a very high probability that you are seeing exactly as I said in 55, 56, market is trying to penetrate itself into 55 and 56. And it will definitely close the day rejecting that level. It will definitely. And that level, we're going to look at the opportunity to at 58, even at 59, we're going to look at the possible reaction. But I'm very optimistic that it will continue to bring itself into the zone of 56, into the zone of 56, into the zone of 55. It will do that. It will most definitely do that. It will do that. So if that comes to that level, it will be nice to see it react. And it will be a bad idea to see it come to that zone where we already anticipated an upswing at that level. So we believe that this is what the market will do, and it's already at 57 and it's pushing. It will continue to pump until it comes to 55 and 56. That will be where it will conclude its rally for the day and make a push. At this level, we have a very strong reliable evidence at this level, showing us that 55, 56, 57, like I said, will hold on daily. So these are daily charts. So at this level, be very, very confident in what you're doing. You don't need to shake. I'm telling you 55, 56, 57, 58 is a potential buy opportunity. The price action is very clear. So let me draw awareness again to the price action. We have a price action of break of structure here, and we have a price action of retest at this level, and we have a consolidation on this roof. And that consolidation bear witness to 55, 56, 57, 58, 59, 60, and up to 65. That price action bear witness to it. And when price return here, price again bear witness again to a broken demand flow, becoming a supply roof twice, respect supply roof after break of structure, and price returns here to respect. So in technical, we're going to have a next day candle as a bullish candle. That bullish candle will come here with a strong impetus and give us a similar bullish reaction as this. So if that happens, you find out that tomorrow candle is going to take away all the sell today. It will take away all the sell evidence because the market is lying on a strong demand flow. And when you look at it again on a critical, market has formed a double structure. That double structure is it's a bullish price action. And you can see that market has broken the neckline of that structure. And on daily, the market has created a psychological ascending trend line, bearing witness that price will continue to avoid further downside after breaking the neckline. This is a double structure. So when you look on your line chart, you will see this is a clear double structure. This is a clear double structure. I want to change the color to blue. Yeah, let's change the color to blue. And then you can see how price, after breakout from the neckline of that double structure, it came down to retest it, but picked liquidity grab, it took liquidity. So that could not have happened because a lot of people lost confidence in that upswing because market had pierced way beyond where it should be. Look at the body, look at the week. Nobody will agree that market will retrace by close of the day. But they did that because of what it respected the structure. The market respected the structure as the neckline of a double a double bottom, indicating that this market is going high. That is what it means. And if we look at what gold did yesterday, it was moving in the same direction as a dollar. As the greenback was moving, it was moving. Yes, I knew it was going to reverse today. The market makers knew very well that they are not going to go inverse direction against dollar. So they invested their money in both ways. They invested their money in both ways, and from tomorrow they begin to sell dollar and buy gold. That is what market makers will do tomorrow. So on technical, because the structure has already told you what market will do on daily, and daily holds a strong price action. So if daily and weekly does not convince you, then you remain on intraday. Because on intraday you will lack clarity, you will lack directional bias. So this is how we manage to chunk out hundreds of free trade on weekly. We have no intention to charge anything. Let me tell you, all those traders you are paying money, they don't know anything about trading. I'll continue to say it, and I'm running a podcast very soon where I'm going to address some of these illicit activities going in the market. A lot of people charge money for it, but they don't know anything about this market. They don't know market structure. And it's not about coming to speak grammar. The grammar will not get any victory in this space. What will earn you victory in this space is the understanding of market structure and fundamental analysis. So if you understand fundamental analysis and you stay within a reasonable trading lot size, a lot of them are doing very bogus lot size, and a lot of upcomers are carried away by that. We have another roof on a daily. We see another roof now. Look at another roof. Look at another roof. So you see that rejection we had was not a coincidence. Even from the roof, you see a clear break of structure from the roof, a clear break of structure from the roof. After break of that, after break of the demand floor price came, we tested. In fact, this is the third retest. So for us to be certified for a future upswing, we find out that we need to clear this roof. So you see, gold buyers now face a strong daily obstacle. We face a very strong daily obstacle. You can see here creating a supply structure after break of demand floor. This is a demand floor, a horizontal demand floor. The horizontal demand floor at this level. I'm going to change the color. So analyzing daily chart gives you a whole lot of confidence. And I'm not happy that I didn't stick to my daily chart and post only daily chart. That would have helped a lot of people stick so tight. So look at here, price here have here as a break of a supply roof, and that supply roof retested and create a new high, and price came down, broke the demand floor, and the broken demand floor becomes a supply roof. Now price started creating a descending trend, and after establishing the touch here, you drop price again, and price return here, it drop. So you see, if what price want to do, if they want to be very, very bearish, if market makers want to be bearish, honestly, they have set up a bearish pattern. Look at the bearish pattern here. If they decide this is what they want to do, then we could just be wrong in all we have been saying. Look at what they have done here. Look at what they have done. Look at what they have done. And they went up again, and they can do something like this. This is also possible. This is also possible. Why is this possible? If buying cannot be sustained at 2657, if they cannot sustain buying at 2657, and the worst we see that will happen here is for them to come back and test 37 level, because this is also a valid area of price action. We have a very strong price action at this level. So we're having two things. After that, stop trying to buy gold, put a sell, because once market breaks out from here, automatically it's a sell signal. So that means that all these things buyers did was a fake news. They have no intention. Actually, gold is in a very high price, and I will tell you the truth. A lot of institutions are not happy with the current price of gold. A lot of central banks are not happy with the price of gold because they are also into risk avert mitigation. So they have a marketing team, and they look at the future of continuous investment. And I believe that nobody is happy with the high price of gold. Nobody is happy with it. So we begin to look at it from a business perspective. Why do you want to buy high? So you see, everybody will be happy to see gold trade below 2,300, 2,300 to give an entry opportunity where new influx of liquidity comes in. So at the moment, the price is high. So if we are facing reluctancy and inability to break upward structure, is because the sentiment is not aligning. The trend is bullish, but the sentiment is not aligning with the reality of it. The sentiment is that the price is too high and nobody wants to pay. So if that is the situation, then we're going to have a problem breaking this structure. We're going to have a very serious issue. Let's be very honest. So while we are trying to make analysis, let's reason like people who are investing their money. I can tell you a lot of institutions are not happy with the current price of gold. They think gold is overpriced. So based on that, it's going to make a whole lot of sense to see that price comes into 2,403. And I will tell you for free that if this analysis fail, if this fail, this is what you are going to see. I'm sorry to say it. So all those people who are telling you something different and using different grammars, and you know, we are But here we don't like grammar. We just tell you what the structure say and go check our chart.